โอเคอ๋อสวัสดีครับทุกท่านครับ Hello everybody วันนี้นะครับเราอยู่กับอาจารย์เจฟทาวสันนะครับขอบคุณอาจารย์เจฟทาวสันมากที่มาสละเวลามาคุยกันในวันนี้นะครับหุ้นวันนี้ที่เราจะคุยกันก็คือ Alibaba นะครับอยู่เช่นเดิมนะครับอยู่กับแทนแล้วก็อาจารย์เจฟGood evening อาจารย์เจฟ How you doing
I'm doing well, thanks. Let me turn that off. I don't know why I put that on. It's I don't know what that's about.
We need some festivity after
The flash is pretty good.
A big drop from Alibaba.
No, I noticed I'm doing all right.
Yeah.
You know what? That's funny.
Yeah.
Wait, how do I do this? That's actually an ant.
Yeah.
Teddy thing or stuffed animal they sent me from Alibaba, which was cool, but what am I going to do with the stuffed? I mean, what's a grown man going to do with the stuffed animal? I don't know. So yeah, that's actually Ant right there. Thanos, SpaceX, Starship. These are JD. Anytime they go to these companies, they give you stuff, so I stick them on the shelf. I think we have Taobao. We have a couple of others up there. Yeah, Huawei books. Books from Huawei.
That's cool.
That's cool. I think we're gonna talk about Ant financials a bit too for today.
Yep.
That's nice. Let me just explain others in Thai for a few minutes.โอเคสวัสดีครับทุกท่านนะครับก็เดี๋ยววันนี้เราจะคุยกันเป็นภาษาอังกฤษนะครับเป็นหลักแต่ก็ตอนนี้มีคนเข้ามาเยอะแล้วก็สวัสดีทุกท่านนะครับHello everybody นะครับ some of your students say hi to you อาจารย์เจฟคุณภัควัฒน์นะครับคุณณัฐวุฒินะครับคุณต้นmany of them are yeah they know you already so but we hope that more people you get to spread your voice around like some new investors here so let me introduce everyone who doesn't know อาจารย์เจฟ first ครับ in Thai first ก็อาจารย์เจฟนะครับอาจารย์เจฟฟรีย์ทาวสันนะครับก็คือเป็นเรียกว่าเป็น expert ในเรื่องตัว Digital China Tech เลยนะครับแล้วก็ปกติอาจารย์เนี่ยก็จะทำเว็บไซต์แล้วก็ทำพอดแคสต์เกี่ยวกับ Asia Tech นะครับอาจารย์มีประสบการณ์ที่จีนมาประมาณ15ปีนะครับแล้วก็แบบเป็นหนึ่งในคนที่หลายคนติดตามใน LinkedIn นะครับมีคนติดตามอยู่3ล้านคนนะครับแล้วก็ไปโหวตเป็นแบบ Top Voice for China 3 ปีติดเลยนะครับแล้วนอกจากนี้ก็มีเขียนหนังสือเกี่ยวกับเมืองจีนนะครับตัวธุรกิจในจีนนะครับแล้วก็นอกจากนี้อาจารย์ยังสอนที่ศาสตร์ศิลป์นะครับแล้วก็ตัวChina European International Business School ด้วยนะครับก็เรียกได้ว่าแบบโหดีใจมากนะครับ we super appreciate that you join us today you are super generous with your time and yeah thank you so much okay so for the first part for the format today basically what happened is we saw Alibaba drop by like 50%
yeah
from since last year and then many of us here also have Alibaba in our portfolio and yeah we would like to analyze with you or maybe you can provide us with like many views on whether Alibaba will come back as a good investment or we will just like kind of go pretty slowly or not giving good returns in the future. Of course, everything is not like financial advice, but I think it will be beneficial that we get to analyze together. Okay. So next slide, please. Yeah, so since like last year, we saw a lot of stuff happening to Alibaba. First, like since October, there was Jack Ma disappearance. And then there's the Ant Financials IPO got taken down by the government, right? And then there's some like fines that the government like fined to Alibaba for the anti-monopoly. After that, there's some the Chinese government also tightening its grip on private sector, like banning too many hours of games, and like the beauty model, and also tutoring, and also like watch closely on big Chinese tech like Tencent and Alibaba taking acquisition. And also there is a macro effect on the Evergrande debt problem. So like a lot of stuff happening to the Chinese economy and also Alibaba itself. Just Tan, do you wanna explain?
Okay. So maybe I'm going to talk about Alibaba in Thai for 5 to 10 minutes to give the background of the Alibaba to the listener. Is that all right?
Yeah.
Okay. ครับต่อจากเมฆเลยนะครับก็จะใช้เวลาประมาณ 5-10 นาทีพูด Alibaba จะได้ถามคำถามเจฟดีกว่าก็ตั้งแต่ Q1 เป็นต้นมานะครับก็อย่างที่เมฆบอกมีเรื่องanti monopoly ก็จ่ายค่าแบบว่าค่าปรับไปประมาณ 3-4 พันล้านแล้วก็ Q2 ที่ผ่านมาก็มีเรื่อง common prosperity ที่Alibaba เนี่ยบริจาคให้กับทางรัฐบาลจีนแบบว่าไม่ได้เชิงบริจาคคือในข่าวเนี่ยเหมือนจะบริจาคแต่ว่าไอ้ตัว 15.5 ล้านเหรียญเนี่ยครับเขาเอาไปใช้ในการลงทุนพวกแบบว่า infrastructure เพื่อให้มันเข้าถึง e-commerce ทั่วแบบว่าเทียร์ต่างๆที่อยู่ในชนบทอะไรพวกนี้ครับเพื่อให้ทุกย่านของประเทศเนี่ยมันเท่าเทียมกันประมาณนั้นซึ่งพิงตัวหรือว่า Tencent เนี่ยก็บริจาคหมดอันนี้ก็ของพี่โตที่บอกว่าซื้อ Alibaba หรือ Tencent ช่วงนี้ก็เหมือนซื้อที่ดินแถวสีลมไม่รู้แต่ไม่รู้ว่าเมื่อไหร่จะโดนยึดนะครับ
Jeff, can I just pause a bit?
Okay.
Jeff, I really like this quote. One of our friends and also your students said that buying Alibaba and Tencent right now is buying like area in Silom or like prime area of Bangkok, but you don't know when the government is gonna take it away. Something like that.
It's not a terrible analogy. I mean, that's pretty. Yeah, it's about right.
Okay. We will talk about this in the risk section later. But I love the analogy. Yeah.
โอเคถ้าดู valuation มันก็ไม่แพงนะครับตอนนี้ประมาณแบบ PE 18 เท่าแล้วก็มีกำไรเติบโตในอนาคตเนาะเราก็มาดูธุรกิจหลักๆของ Alibaba ก่อนว่ามันมีอะไรบ้างจะได้เข้าใจว่าเวลาพูดถึงหลังจากนี้มันจะเป็นยังไงนะครับส่วนใหญ่เนี่ยมันก็ยังอยู่ในพวกของ e-commerce ก็คือAlibaba เองเนี่ยถ้าดูฝั่งซ้ายจะมีพวกแบบเถาเป่า Tmall AliExpress ถูกมั้ยครับก็จะเป็นพวก C2C B2C หรือว่าเป็น B2B ทั้งในประเทศแล้วก็ต่างประเทศแล้วก็มีธุรกิจคลาวด์มีธุรกิจพวกร้านขายของต่างๆที่เป็นไฮเปอร์มาร์เก็ตหรือว่าเป็นตัว Ant Financial ก็ถืออยู่ประมาณ 1/3 ก็คือ Alipay นะครับแล้วก็ใช่เหนียวก็เป็นตัวโลจิสติกแล้วก็มีตัวเลอมาพวก delivery อาหารอะไรประมาณนี้ครับuser ทั้งหมดเนี่ยของ Alibaba เนี่ยในประเทศจีนเองประมาณ900กว่าแล้วก็ต่างประเทศประมาณ200กว่าก็มีพวก Lazada AliExpress อะไรพวกนี้นะครับรวมทั้งหมดเนี่ยก็มีผู้ใช้ประมาณ 1.2 ล้าน user เลยแต่รายได้หลักๆเนี่ยก็ยังมาจากตัว core commerce ก็คือสีม่วงแล้วก็เป็นตัวธุรกิจคลาวด์สีฟ้าแล้วก็ตัว digital media entertainment ต่างๆก็อยู่ในสีเขียวครับมาดูการเติบโตกันบ้างอันนี้เมฆพูดดีกว่า Okay.
So we have introduced what Alibaba does, right? Right now, I saw your in email. One of the things that you like the most Alibaba is it is riding the mother of our secular tailwind, which is like growing wealth in the Chinese economy. So like what my question is the tailwind still there? I mean, e-commerce penetration is like more than half already, and the wealth is still going, but is it like before, or is need to focus on like international expansion more instead?
Yeah, I mean, I like a couple things long term. One of them is I like growing Chinese consumption. which is really middle-class families who are getting wealthier and wealthier and spending more and more. And everyone's in favor of this, everybody. I mean, to a large degree, it's cultural. Everyone thinks about making money. Everyone wants, it's actually kind of impressive how everyone's buying apartments at age 22, right? It's all about we're going to get wealthier as a family. And then the country more or less has the same approach at the government level. The government's like, we're going to become the biggest economy. So like GDP growth, family wealth, all the boats are pointed in the same direction. Now, if you go to the US, you're not going to hear that same story. I don't hear President Biden talking about growing GDP every day. I'm sure it's in his speeches. I don't think it's like a huge priority. In my opinion, it's a priority, but it ain't like China's like, we're going to be the biggest economy in the world. So one, yes, I like consumption, domestic consumption, which is one of Alibaba's 3 big growth pillars, right? They mentioned 3 in their analyst reports: domestic consumption, cloud, international. So I like that one. And then I like the fact that software creates tremendous value. This is just, across the board. It just makes things more efficient. One, you can take market share from others. So the digitization of retail would be one version of that. 20 to 25 to 30% of retail now moving on. But it's a bigger phenomenon. So like ARK Invest, that's what they're focused on, is how software and data create value. So that's another big, so I like both of those. And Alibaba sort of sits on both of those. Now, if the wealth you create is transferred to the government or somewhere else, well, that it was created, maybe do you keep it is another question. And certainly like a lot of the big companies like Alibaba have been used as proxies for those trends, which is totally logical. And you can see it in the Alibaba numbers over year after year. It's where the profits go seems to be the question of the month.
Because part of it is gonna be if the government decide to continue to take fine every now and then
it's a big tax. Or you could consider it another type of ownership, depending how you wanted to. You could always consider taxes a type of ownership if you want. You could call those a type of dividend, I suppose. But if there's going to be, these big numbers they got hit with, the $15 billion donation over 4 to 5 years, that more or less works out, I believe, to about a 25% tax on their profits. If that keeps going, that's going to change your valuation pretty significantly. Now, I suppose you could ask, what are they doing with that money? Are they just giving it away, or are they investing it in things that's going to make more money? We'll see. Yeah. We don't quite know what that is yet. It's like common good. Okay, where's it going? Is it just transfer? I think that's the other question. But that's been it's a big question mark. Everybody's thinking about it. But to answer your question, no, I don't think the tailwind's changed. I don't see anything in the tailwind that's changed. If it does, we'll see it in the revenue and we'll see it in the gross margins. That's where it would show up, right?
Yes. Got it. So which part of how about international expansion? Do you think the growth is still there for the tailwind? Because we feel like, for example, the C Limited is held like partly by Tencent, right? And basically C is like attacking everywhere else. Will Alibaba do like that with Lazada or somewhere?
I kind of have two minds on that. Like, one, I'm interested in the China story. I think that's the big story. Everything else to me is much smaller. That said, you can't look at their investment portfolio of Alibaba and Tencent and look at who they've been investing in. Paytm in India, although that became a problem, Garena, Lazada. I mean, they do seem to be acquiring a fairly impressive investment portfolio around the world. So it's almost like I wouldn't, like in my mind, I have domestic consumption as the big driver. I wouldn't put international consumption. I'm not really that interested in consumption in Paraguay. If it's international investment, that's actually pretty compelling because they seem really good at that. But I mean, it's a different picture when you start looking at, let's say, C or Garena, Shopee or something, because adding Thailand and Malaysia to Singapore to Indonesia to Brazil to Mexico can really move the needle on their numbers, right? You add Mexico and Brazil, it's going to move the numbers. You add Mexico to China domestic, it's not going to move the numbers that much. You know, the China numbers are just too big. If you don't have a China opportunity, you're not going to move. My one exception to that would be I do like expansion to Southeast Asia because I think China plus Southeast Asia is a good story for consumption. But if it's just Alibaba in China, like, is the Mexico thing going to help them? Come on, the numbers in China are too big. But I do like the Pan-Asia story, and the India story was getting interesting until the Chinese companies kind of got all shut down. But, you know, I could be wrong. I mean, SoftBank is all in Latin America, right? They've been flooding money into Latin America for the past year. I like these companies as invest. I like when like Alibaba partners or DD partners with SoftBank and they both buy into Brazil together. Like, I like that, right? Because I know like SoftBank's really good at investing everywhere. But if it's the consumption story, I don't know that much about consumption in, I don't know, Chile.
I agree with you with the tailwind in China. But I listened to your podcast and you compare Baba with Tencent that have WeChat. Do you think Tencent is well positioning and gonna eat Baba lunch in the future, or like any other companies gonna rise?
I think Tencent is a big e-commerce company. They're the one competitor that I'm concerned most about for Alibaba's Tencent. You know, their numbers are moving, what, 200 billion US GMV, up 100% with their mini programs. You know, keep in mind, like a good analogy would be, you know, Alibaba was awesome at payment for a long time, and they had most of the mobile payment market. In a couple of years, WePay came out of nowhere. Well, not out of nowhere, but they came in very quickly and took 30-40+% in a couple of years. So they've done it before where they've jumped into their business and taken a bit. And they, in both cases, they're leading with WeChat, or they're leading with Messenger. So yeah, that's the one that gets my attention the most is mini programs. That said, one of the things I like about e-commerce a lot is it moves slower. Media, payment, Messenger, videos, short videos, they can all move really quick. A new thing comes along, market share shifts. It takes a long time to build 1,000 warehouses across China and get 12-hour delivery in 1,500, you know, districts. I mean, you're not going to do that in 6 months to 12 months. So you're going to see a competitor coming.
Right.
So I like that e-commerce is a little bit more predictable than, say, media, entertainment, things like that. But I'm keeping an eye on it. I mean, I'm definitely, mini programs is on my top 3 things I'm thinking about for Alibaba.
All right. Yes, we were putting that in the next section of the slide also for competition. แทนลองดูสไลด์ต่อไป yeah,
this one,
like we put the like Alibaba is like competing everywhere in media, in cloud, and also in the e-commerce. And we was just about to ask you also what is the thing in competition that you like focus the most, and you anything else other than
the problem with Alibaba is it's so complicated now. It sort of defies all the frameworks. If you want to ask me about Tesco versus Walmart. I can, it's kind of apples to apples, right? But this is like 6 different companies stacked on top of each other. So it's kind of hard to I've detailed it out pretty specifically. But you're really looking at a conglomerate. I mean, I think it's a digital conglomerate. You're looking at GE versus Siemens versus Bosch, right? How are you going to know? You're going to have to go business line by business line to figure out what's what. So, when I look at Alibaba in terms of competition, I've laid it out. I call it complementary platforms, marketplace platform. I don't really pay too much attention to their media business because it doesn't make any money. I like the payment business. I like the e-commerce business. I love the cloud business. I like the logistics business. Everything else to me is much smaller. And all of those things feed directly into e-commerce, which is we're in the business of transactions. Now, if you look at Tencent, they've got complementary platforms as well, messenger, payment, gaming, and others, but they're focused on attention, right? That's what they're best at, is getting your eyeballs so many minutes per day, and then they tee up ads and virtual gifting and all that stuff. So this to me is like a digital conglomerate in the attention business. This is a digital conglomerate in the e-commerce business. So people say, how do you compare Tencent with Alibaba? I'm like, I don't know. It's like a lion versus a tiger. They're both really impressive animals, but until you put them in the ring and say, look, fight, you're not going to know who's going to win. No framework is going to tell you. And it actually turns out the tigers win most of the time.
Oh, really?
I didn't know till I looked it up. I had no idea. Turns out tigers win. That's kind of how I look at it. And one of the things I'm sort of thinking a lot about this is like, what happens when an attention business goes into e-commerce?
Yeah, that's what I want to ask you as well.
Like TikTok. I can figure out what Alibaba is going to do against JD, and I can figure out Alibaba versus Pinduoduo and a smaller specialty e-commerce player. I've written a lot about specialty e-commerce players, which I think is a really cool place. I can figure that out. But what happens when a really compelling entertainment company like ByteDance tries to jump into e-commerce? So it's kind of like, the way I've got it in my brain is Alibaba's big competitive strength is infrastructure. It's got a lot of them, but infrastructure.
Right.
Logistics, delivery, cloud, increasingly retail spaces. That's their infrastructure. That's kind of their barrier. What does TikTok have? They have attention. They're very good at attention. So what happens when the attention business goes against the infrastructure business in e-commerce? I'm not totally sure. But they're going into it. Maybe they'll get nowhere. Like live streaming was an example of this. Like live streaming was kind of already close to e-commerce anyways. And Alibaba moved very quickly. And now they've got Taobao Live, which is huge.
Yeah.
Right. So they're pretty good at like moving at the product level on top of their infrastructure. But so is ByteDance. ByteDance is good at the, no one's been able to replicate the addictive nature of TikTok because of the AI capabilities they built. Facebook couldn't do it. Have you tried Reels? It's terrible. It's a total copy of TikTok. It's terrible. So we'll see. I don't know what the analogy is. That's not tiger versus lion. That's like alligator versus like lion. Like, I'm not totally sure who's going to win that one. I know they're both big animals and they're pretty cool.
Do you think it is as hard for like TikTok or ByteDance to just build the infrastructure, all the warehouses and everything? Or but you see that coming? Or
I think it depends what sector you're talking about. Like subsector of retail. Like if I tell you we're doing makeup, then you could see that TikTok doing e-commerce in makeup would be pretty compelling because it's got a high content aspect. It's a lot about entertainment and attention, and the logistics ain't no big deal, right? Now, if I think here like TikTok is going into groceries, well, groceries is mostly about the logistics and the infrastructure. They ain't going to touch that, right? So, and nobody watches videos of, well, I mean, there's cooking shows, I guess, but socks and underwear. Nobody's watching videos of socks and t-shirts and underwear, and the logistics are what. So you can kind of see subsector by subsector, like where that play might work and where it's like, yeah, never going to happen. Fashion, apparel, makeup, beauty, tourism. Tourism is pretty cool in terms of the attention business because the videos of tourism are cool. People like them. So like groceries, socks, t-shirts, shampoo, detergent for the washing machine. I don't think TikTok's gonna,
So yeah. So one of them is you're watching closely. You said like the mini program, right? And what's the other two that you are watching closely?
You mean in terms of companies or risks and whatever?
The competition between the companies.
I like specialty e-commerce. That's kind of on my short list of things I like and I feel I can understand. So I put together some framework. I looked at a decent number of these. Food Panda, which is Delivery Hero out of Germany. Ding Dong, these specialty grocery delivery stores. Mai Tai in China. New Oriental Trading, which is actually a Warren Buffett owned specialty e-commerce company that nobody knows about. It's really cool. I like these sort of specialty smaller e-commerce players that I think are very competitive against the giants. One, there's more of them. People don't pay much attention to them. So if you can figure them out, everyone's looking at Alibaba. How many people are looking at Delivery Hero?
Not many.
And two, so one, nobody's looking at them. They're easier to understand than the Alibabas. I put together a framework for the subscribers, like 5 questions to assess the viability of a specialty e-commerce company. And the other thing is it looks like the government's kind of helping them. The government is reining in the giants, and that's going to benefit the medium to small players who really had a gun to their head. It would be if Alibaba wanted your business, there wasn't much you could do to stop that. Well, now you can. Now, if they move very aggressively against these companies and throw their weight around, they know the government's watching them from behind now. Right. That's going to help a lot of these companies. They used to come up and say, look, we want to buy your company. You look good. We want to buy you or we'll buy your competitor. And then we're going to help them. So you kind of had no choice. It's like the mob makes you an offer you can't refuse. I don't think they'll be able to do that anymore in China. Amazon will keep doing it in the US because the US government doesn't scare them in the slightest. But in China, these big companies are watching their step now. So, this is, the Alibaba share price is not great. But you could argue that this is going to be better for the whole e-commerce sector of China going forward. It's going to be a healthier ecosystem, but lots more players. That's all going to be good for us if you look at these companies. Although, don't look at the share prices right now. Like I said, it'll be depressing. So I don't see anything that's changed with the company competitively, right? It looks pretty much the same as it did a year ago. But
true. But would you say one of the competitive advantage of Alibaba and Tencent is to be able to just splash money and buy other people, and that advantage is just gone now? Is that the reason the price go down as well?
Yeah, you can compete with we're building in switching costs with our merchants, and we're creating lots of digital tools, which JD is doing as well. We're giving them AI, fashion tech that the merchants on our platform are using to build and make their services better. Oh, and it kind of locks them in because you become dependent on the tool. If you build your business on Alibaba, it's very hard to switch. So they're locking you in, which is a good competitive advantage, but they're doing it in a good way. They're giving people what they want. Your accountant does the same thing to you. You work with your same accountant. It's a good accountant. Switching to another accountant has a switching cost, so you don't do it as often. So that's a good type of competitive strength. A type the government doesn't say anything about. The type they have a problem with is when you start throwing your money around and you say, all the merchants, you all got to take a 5% pay cut or else take it or leave it. And they all have to say yes because they don't have any other options. That's the kind of thing the government's responding to. Or you've got to be exclusive with us. If you're on Alibaba, you can't be on JD. That stuff's been going on. That you can't do anymore. Or we're just going to take a ton of money and we're just going to flood it into the community group buying space. We're going to subsidize prices so that our service is better. Everyone will come to us. The other companies will die, and then we'll have the market, which is a common play. And the government has basically told them, stop this, which they were doing in community group buying. Not pretty much everybody. All the big players were just using their money to subsidize prices to take the market. And the government basically told them to cut it out. So that type of behavior, I think, is actually not very healthy, and it's not good. You shouldn't be able to just throw away your money, throw your money around and put people out of business, and then like, okay, I got the market. But it's pretty common. We call it last man standing, where you all basically you all just basically bleed. You say, well, I'm going to build a factory, and we're all going to sell at cost, and we're all going to lose money. And one by one, people are going to bleed, and then they're going to fall over dead. And whoever dies last gets the market, right? So then it's like, once everyone's dead, then you stop the bleeding. You're like, okay, I got the market. Pretty common. We see it all over China and lots of industries.
What about and financial? What are the implications that China government put the digital yuan in the market, and also they break the garden wall of the like Alipay, like Alibaba have to accept that we should pay something like that.
Yeah, I mean, there's a bunch of these other issues floating around. The walled garden one is kind of interesting, how much they're going to have to share data. I actually think it's good. Like, I wish the U.S. government would require Facebook to open up their social network. I wouldn't like it if one company owned all the roads in town. At a certain point, it becomes a public good, and it's like, look, you got to open up the roads to everybody. You can't just charge it's not an exact analogy, but it's kind of close. I think these companies in the U.S. I'm talking about, they have acquired what I think are public goods, and they're using them privately, and I think that's not good. But okay, the case of opening the walled garden, sharing the data, I'm not totally sure what's going on with that or how much they're going to do it. It's not like there's a big database and you say, hey, you can look at my database. Database is only valuable as you use it. Like, its value is in the usage, which is really often in real time. If let's say I'm Didi and I'm told I have to share my traffic data with, I don't know, AutoNavi. Well, if I'm not giving you the data right now, if I'm giving you yesterday's data, is that really valuable in terms of traffic patterns? Like, it's got no value. Okay, you can study it, but if I delay it, so it's not clear to me what this move means. I'm not sure if this is a minor order, like stop squeezing the merchants. Like, look, we don't want you to be abusive here, and we just want to curb bad behavior. Or is this a wholesale change of, look, you need to open up everything? I'm not sure. That would be important. I'm not sure if this is not just dialing back some behavior they view as not great. I don't know which one of that one is. I'm watching that one, but I don't understand it yet.
Okay.
The Ant Financial one was, that was a big deal. If you had done a valuation of Alibaba a year and a half ago, you would have had Ant Financial as a major aspect of their value, which was really, they had a big story. It was kind of, I didn't really buy it. they were going to do daily life services. They were going to do a finance marketplace, which was wealth management. They were going to do digital insurance, credit, consumer and supplier, and payment. If you look at the money, it was mostly about the payment and the credit. Credit to consumers, like $200 billion was outstanding at the time they were going public. And then supplier merchant credit, which is actually hugely helpful because it's one of the big issues of China is small and private companies have a very difficult time getting any sort of credit. And it stymies their growth. And everyone knows this. Government knows this. It knows it's a huge problem that the 4 big state-owned banks are not set up to make loans to small private enterprises. They basically loan to other state-owned companies. So the government knows this is a huge problem and it wants help there. But the government has also been incredibly vocal going back 15 years against shadow banking, against widespread lending by non-bank entities, which has mostly been state-owned banks. So when Alibaba was doing this thing, we're going to do a lot of loans, but we're going to be the processor and the loans are going to be held by a bank. It was not surprising they had a major problem with that. You could see that one coming a mile away, that they were going to dial that back. And one argument is, they were going to go public and then the government stopped them. The other argument is they knew the government was passing regulations to stop this, to say, look, if you're going to make loans, you have to keep reserves. You have to have a bank-like balance sheet.
Yeah.
Not entirely, but like 35%, which is I think what they ended up at, that regulation was on the way. Everyone knew it. And so one argument is they tried to rush the system and go public before the regulation came down. So it's like, the government stopped them. Or maybe it was Alibaba that was pushing the timing. I don't quite know which of those is true. Or maybe someone just got pissed off. We've heard that story too. I tend to think it was more of Alibaba was rushing to go public to beat the regulations. And the government just checked them on it and said, nope. But that's a guess. I don't know. But everyone knew that regulation was coming. The payment business, okay, so that's the credit business. The payment one, which is a good business, then you got the digital yuan floating out there on the horizon.
Yeah.
It's not totally clear to me what that is. Like in theory, you could say, look, the digital yuan is no different than a physical yuan. It's just currency. And what matters is the platform, right? You don't want to own the US dollar. You want to own MasterCard, right?
Yeah.
The platform business model that connects merchants and that's what you want. And you can be trading yuan or renminbi or digital renminbi or whatever. So if the government is just creating a digital currency, which gives them total visibility into every aspect of the country, by the way, financially, that would be one thing. If they want to go into the payment business where they're creating the platforms, that would be different. Because why do these platforms exist? Because there's security issues, there's fraud issues, there's advancing technology. There's a lot there. I think what I hear, they want to be in the currency business, but maybe they want to be in the platform business. That would be an issue for Alipay. So yeah, that's a question. It's really interesting what they're doing with the digital yuan and why they're doing it. I don't think they want to be doing transactions. I don't think that's their goal. I think it has to do with visibility and transparency and creating an alternative to the Western banking system, which will probably be and has been weaponized against them. The U.S. does do that. Right. They ban you from the banking system. Try to get a credit card anywhere in the world. It's a pretty devastating move. They weaponize trade. They weaponize tech, supply chain. The U.S., which I'm an American. Everyone pretty much thinks they're going to keep weaponizing the financial network of the West, the banking network. Okay, you're out of the network. Good luck getting a plane ticket. You have to pay in cash. You literally have to go to the airport and pay in cash. So this creates an alternative to that. I don't know. I mean, that's all the political
yeah.
scientist stuff.
Okay. If we move on to the next section, should we ask a bit about founder? Because normally when we review each company, we like review the founders a bit. And right now the CEO is Daniel Zhang, right? My question to you is how much of Alibaba's success is like attributed to the leadership for like Michael Evans and Daniel Zhang? Are they like top-notch CEO and do you think they will continue
Yep.
to like excel and then lead the company?
I would look at it at two levels. You have the management, and then you have the staff. The staff at Alibaba, there is a very strong culture that they've built, and this is probably Jack Ma's legacy. You know, he was never a tech guy, not really, and he can't code a line in his life, and his business. He's not even that. I mean, when you ever hear him talk about business, his language is very strange. I don't even think he's the strategist. I think it was always Joe Tsai, the vice chairman, co-founder. But what Jack Ma is incredibly good at is building cultures. I mean, he's a teacher. And, you know, the Alibaba culture is great. It is like you join, you know, there's statues all over the campus that symbolizes how you should work and progress in your life. And when you make it to 4 years and 8 years and you start, and then there's all these symbols, and that we work together, and you know they have weddings on campus every year, and hundreds of people sign up so that they can be married on campus, and Jack Ma does the officiating. It is a very strong culture of very, very smart people. If you're a young computer scientist person coming out of China, where do you want to go work for your first job?
Yeah, all the big tech.
You want to go to one of them, and Alibaba's on the short list. You may go to a startup later, which a lot of them do, but no. So they have like the two strongest cultures I've encountered in China are Huawei and Alibaba. The Huawei people are just crazy. They work so hard, it's stunning. Like everyone thinks people work hard in China, and then there's Huawei. You don't want to compete against them ever. No, ever. The title of their book. This is the Huawei book on the human resources aspect of Huawei. It's called Dedication. It's all about you work harder than everyone else, outlast them. Alibaba's the other one. Okay, so that's the culture. Then you move up to the management. Yeah, they're awesome. They're better than the vast majority of management teams at tech companies out there. I think they're better than Facebook. I think they're better than most Silicon Valley companies. Amazon is maybe similar. You put them against Facebook, they'll run Facebook into the ground. I think they're smarter. Now, it's hard to say, but that's just always been my impression. You know, Jack Ma's been gone for several years. He hasn't been operationally active for years. I think he went to a board meeting 2019. I think he no longer had a role, but he was still on the board. I think he showed up at a board meeting, and apparently he just said, hey, and then he left after 15 minutes. So he's been out of there operationally for years. However, he is in charge of Ant, right? He has operational control of Ant. Michael Evans, former head of Asia for Goldman Sachs.
Yeah.
You know how smart you have to be the head of Asia for Goldman Sachs? I think he was head or co-head. Daniel Zhang, new president. You know how smart you have to be to rise the ranks and become number one at Alibaba? You know how many smart people work at Alibaba? It's like being the smartest person. It's like being the best engineer at SpaceX. Like you've really got to be smart. Chris Tung, CEO, outstanding. Joe Tsai, the vice chairman, I don't think he's that involved anymore. He's got his basketball team. Crazy smart. Yeah, they're all smart. Even they're like, I deal with media relations teams and sometimes investor relations teams. Even those people are like top players out of New York City. Like, yeah, they're the A team across the board. So it doesn't mean they won't screw it up, but You could take it apart by incentives if you wanted. What is their long-term incentives? I think Huawei actually has the strongest structure where they systematically get people to buy in and create the bulk of their wealth in life by owning Huawei shares. And then when you retire, they make you sell the shares back so that other people can buy them and move up. They have a very well thought out system where the people who work the hardest and build the engine of the company capture the bulk of the wealth that's created. Alibaba doesn't have it as much, but yeah. Oh yeah, top, yeah. 4 stars across the board for both of them. Tencent's awesome too. So is ByteDance is pretty cool. A lot of I mean, Charlie Munger said this, right? Was it Charlie Munger or Li Lu? One of the two guys. I mean, he basically said he thought the strongest companies in the world were now in China. Maybe that's true. I don't know. It's hard to assess something like that.
Gotcha. Yeah, I think that's strong.
I view it as who would I
if you
be
move on to the sorry
the way I think about it is who would I be afraid to compete with? I would really avoid competing with Alibaba. I would be afraid of competing with Amazon. I'm not that afraid of Uber. Not really. They move slow. I'm kind of afraid of Sea Limited now. They seem to move. Run, Forrest, run. Yeah.
Yeah, blistering speed. In terms of can we go back one slide?
Yes.
Can like for the like valuation. I saw your way of valuation from your class, right? So basically, you project out 3 to 4 years, and one of the things that stands out is like, and that's what Warren Buffett do as well, is to rule out like those that are almost impossible, the scenario. Do you think what are the scenario that you rule out for Alibaba? Like, is it like super fast growing company taking over the world? No, not anymore, right? Or will it be taken away by government? Something like that. Will that happen, or is that impossible?
Well, that's the George Soros argument, right? George Soros wrote this op-ed a week ago, basically the short case, and he basically threw out the idea, as far as I can tell, that the president of China may view private enterprise completely different than anyone thinks. He may not be in favor of private enterprise at all. If that's the case, then these companies, none of them are what we think. That was his sort of short, I mean, that's a terrible explanation, but he did throw out that idea. That's not specific to Alibaba. I mean, I'm not a portfolio manager, so buying, I don't make stock recommendations with it, because there's a lot of factors that would be very important in that I am not an expert in. Right? Your portfolio, types of risk, things like that. I focus on strategy, right? That's where I live. When you map out a company in your portfolio analysis and your company house, the competition bucket, that's me, right? You move over to the regulatory bucket, that's not me. Go to somebody else. If you're going to focus on strategy and competition and competitive strength, that tends to play out over time. It's not going to play out in 6 months or a year. That tends to be 3, 5, 7 years, right? And that's why I focus on competitive advantage. And Buffett has basically said, like, he doesn't think he's good at predicting value under 5 years. He thinks he's good at 5 to 10 years, because that's when competitive advantage and the long-term trends will play out. Now, I think he's being modest. I think he can do both. But, he's focused on the value of years 5 through 10. And in those years, poring over this year's financials or this quarterly earnings isn't going to help you. What's going to help you is understanding the business model, the competitive strength, the longer term trends, and then maybe these external risks like government, tech, things like that. So, I mean, I'm kind of in the same mindset. So when I map this out, I might look at the current state, earnings power, value, perpetual growth. RVLV is reproduction value liquidation. That's not going to help you very much in digital companies. And then I might do an explicit cash flow for a couple years, but I won't go more than 3 years. Then I jump 3, 5, 7 years out, and I start ruling out possible futures. You'll hear Buffett use language like, why did you buy that company at this price? And he'll say something like, I was sure it was worth at least this much. When he says, I was sure it was worth at least 200 billion or whatever, he's ruling out everything below 200 billion. That's what he's saying. He's not saying what it is. He's saying it's above this number. I'm confident it's not this, which is pretty much what you can see on my graph here. Is I'm ruling out the downside case, and I'm ruling out an upside scenario. It's not going to be this much. It's not going to be that big. Now, you can't do either of those things if you don't have a measure of competitive advantage. If you don't have competitive advantage, the lines can go anywhere. There's like smartphone sales. They go up this year, then they go down this year. What movie's going to be a hit this year? I don't know. Maybe it's the Avengers. Maybe it's Frozen. I don't know. If I don't have some sort of competitive advantage and a secular trend that is absolutely rock solid, like water and smartphones. I know how many human beings there'll be on the planet. I know everyone needs water every 3 days, and I know everyone needs a smartphone. Full stop. Okay, that gets me a floor on demand. Then I can get a floor on competitive position, and then I can start to rule out downside scenario, and I can probably rule like they're not going to be 100 billion smartphones sold in 5 years. It's not that many people. So you can kind of rule those out, rule out. And then between the three, see if you can sort of map out a couple scenarios that might make sense. And maybe one of them's awesome. Ooh, if scenario A happens, I'm going to make a lot of money. Worst case scenario C. Well, it's not that bad because I've ruled out below that. So even if scenario C happens, I didn't lose. That's kind of what I'm doing. But that's a very limited approach, right? I mean, most people are jumping in and out. The hedge fund people don't do that. They're jumping in and out every day. It's different thing. It's not my skill set. I'll look for catalysts and optionality as well, but that's pretty much my whole approach.
By competitive position, you mean like market share and those things, right?
Market share, I mean, if you have a strong competitive advantage, you should see that show up in stability of market share. Not big market share. You can have 10% of the restaurant business on your street. If that 10% is lock solid, that could be a nice business, Don. And then return on invested capital that is greater than competitors. Not necessarily big. The economics of your business are going to be determined by more than your competition. They're going to be determined by labor rates, external factors, what business you're in. Ride sharing just doesn't make that much money. Nothing you can do about that. But if one ride sharing company is making 12% return on invested capital and everyone else is making 8%, I start to think, okay, that company's got some sort of advantage where they're either able to raise their prices for the same business or lower their cost structure for the same business, which should show up in revenue minus cost divided by internal invested capital, ROIC. Same business, ROIC is a little higher. You're either making more or you're doing it for cheaper. And I got a whole book on this coming out in the next 3 weeks. Maybe the first volume is going to come out. Just mapping out competitive advantage by doing checklists. But yeah, that's kind of how I do it. And it's the weakness of this approach is you're looking for great companies with competitive strengths. That's Buffett. I am actually as much or more interested in mediocre companies that are competitively defended. They're not throwing off cash, but they're protected. And there's a lot more of those out in the world than there are. It's unlikely you're going to have a big competitive advantage, big growth, and really attractive unit economics. Right. That's Microsoft. Very few companies have all three. I'll give up the growth and I'll give up super attractive unit economics if I've got competitive strength. That could just be a hotel on the beach and there's only 5 spots and this hotel has one of them. It may not create a lot of wealth, but it'll preserve your wealth. So, I mean, there's sort of those 3 things, and everyone always wants all 3. Very few companies have all 3. Maybe you have a great business with good unit economics, like competitive strength, unit economics, but it ain't growing. Okay. If you get in at the right price, that's not bad. Right?
Right. Yeah.
Everyone wants the rock stars these days, you know. There's a lot more companies out there. I mean, how many of those companies are there? A couple hundred? How many mediocre, well-defended companies are there with okay economics? There's thousands of them. So, yeah.
Gotcha. Okay, if we move to the last section before we go to Q&A, which is the risk. Like we already talked a bit about the regulations and like the counter strategy of the, for example, mini program. But do you think right now, like the risks are realized by the market? The market is not missing those things, like they are priced into the stock.
Or do you think I don't know. I think your list is very good. I looked at your list. I thought it was very, very good. I think, I mean, you hit my main, those are really my 5. And those are the ones that are on my list too. I am worried about the delisting of Chinese stocks out of the US. I think the government of China does not want Chinese companies under regulatory authority of the US. I think they want them in Hong Kong and Shanghai. Now, you know, if it's depository, does that matter? Is it fungible? I'm not totally sure. I've been asking lawyers, like, how does that work? If they delist, what is it? I don't know. I am worried about that. I don't think we're going to see a lot of Chinese tech IPOs in the US in the future. That's a guess, but that's my baseline assumption, is they're all coming back to Asia. Because you can see why. I mean, you can see how it's going to play out. The US government, SEC will say, we need to have access to these books if you are going to be listed on a US stock exchange. The Chinese, and they will say, okay, so-and-so company in China listed in the US, you must provide these books. And then the Chinese government will tell them it is illegal for you to provide that information. And these companies will be stuck in a standoff, which is what the accounting firms are stuck in for several years now. And they'll be stuck in the standoff. And then I think eventually the US government will probably tell them to delist or something. I think that's how it'll play out. Now, does that really matter as an investor? No, because there's ways to buy things indirectly, right? You can buy tracking, whatever. I mean, it's not changing the company value. It's just whatever. I'm buying, my stuff is moving to Hong Kong. That's what I'm doing.
Sure.
But I'm not sure how worried I should be about that for the US stuff, because I don't feel like I understand the legal bit. Offshore expansion, Lazada versus Shopee. I don't pay a lot of attention to that. As I mentioned, e-commerce shifting from marketplace to attention. I mentioned that. Yeah, that one concerns me a bit. The e-commerce counter strategy, that's mini programs. That's top of my list. And then obviously the big one we're all talking about this year, government regulations, fines, oversight, acquisition. What we're seeing is really kind of interesting. We are seeing an active government in a way we haven't seen. The US doesn't act like this against tech companies in the US. They're private, right? Chinese government is very active, and they've always been active. This is not new in that sense. So that's one axis people are trying to sort of struggle with to understand it. The other axis I kind of say is, look, are they smart or are they dumb? Like the things they're doing, do they make sense? Is it stupid? Is it making the system better? And I would say overwhelmingly, everything they've done has been very thoughtful. I haven't seen anything that struck me as dumb. In fact, I thought it's like, yeah, I agree with almost all of that. May not be awesome for shareholders, but I agree with most all of it, except for the shared prosperity thing of, that one I wouldn't agree with. But then you look at other governments, okay, the EU has got its GDPR thing and they're doing privacy, whatever. But it's easy for them to do that because they don't have any homegrown giants. You have regulators, but you don't have the giants, right? China and the US have the giants. So they have something to lose. And then you look at California and their regulations were idiotic. Australia, like their whole, we're going to get Google and Facebook to write checks to Rupert Murdoch or whatever that thing was, idiotic. India is jumping all over the place. I don't think it's terribly thoughtful what they're doing. Doesn't strike me as California stupid, but it doesn't strike me as well thought. The China approach strikes me as very well thought out. Privacy, data, abusive behavior by the giants, aspects that are harmful to society, excessive capital-driven growth, which China has always engaged on that. When there's a lot of capital flooding around to, all the capital's going into Kunming, and all the real estate prices start going up because everyone's starting to buy the government has routinely jumped in and said, stop it, slow down. They don't like these capital-driven manias that happen domestically in real estate all the time. That's kind of what was going on in education that the Chinese government stopped. That nonprofit thing, that would be the other thing that kind of shocked me. The shared prosperity thing and the education companies being nonprofits, those are the two that really surprised me. That was like, ooh, yikes. Yeah. So it's a different system. It just is. You can avoid it and say, well, I'm not going to do that system. Okay. That's one approach to uncertainty. You can only enter when you have a big margin of safety that covers you. More risk, more safety. You can jump in and out fast. I'm only going to be in 3 months, then I'm out. 3 months and I'm out. I'm not going to expose. Or you can kind of do what I do, which is I just look for the highest quality, most defended companies and then think longer term, like a plane going over the clouds. That's kind of how Phil Fisher invested during the Great Depression. He was one of Ben Buffett's teachers. He bought the highest quality companies and held them for a long, long time because he was, he grew up as an investor in the 1930s. So,
okay.
Anyways,
so
I don't know if the market's factoring any of that in. No idea.
Okay. All right. Okay. Thank you. So from what I'm listening, is like the overall picture. I feel like the competitive landscape, Alibaba will do just fine, but the regulatory, like, is Alibaba gonna become non-profit? No one's gonna know, right?
Well, that's the George Soros question.
Yeah. Is it called like neo-cap communism? Because like one of the
I don't know.
viewer comments.
You can't discount that as a possibility. That this may be not a capitalist system at all. Now,
Gotcha.
I tend to think it wouldn't work. I mean, China is, in my opinion, very pragmatic. They want to be wealthy. They want to be important. They want to be a technological leader. They understand how capitalism works. They access foreign capital all the time. They encourage entrepreneurship. The highest level of their government has issued, like, we want mass entrepreneurship and innovation. That's a major government policy of 2015, where they want everyone to be mass innovation, everyone to be they want entrepreneurs and innovators everywhere. So that they're not, you take away profits and it's like, they know that you're not going to have big tech leaders, if the shareholders aren't making money and people aren't investing. So it strikes me as it wouldn't work. But
yeah, great.
I don't know. Ask George Soros. He's the billionaire. So.
Yeah, many people also like not agree with his view. Like I saw BlackRock like coming to defend their view. But yeah, anyway,
I think you can conclude that I don't think the government cares much about foreign shareholders. I don't think they don't know they're there. But I think on their list of priorities, they're not in the top 3 to 5. I think that's like they're pretty sure they'll keep coming back. But after the ed tech companies got wiped out, Liu He, the sort of key voice, I mean, he basically came out and said, look, we understand that foreign investment is incredibly important to the country. And he responded within like 2 days. So I don't know.
We'll see.
I have one last point because I keep talking. Keep in mind the government's not the only force that matters. It's a huge factor in things. The other big factor, in my opinion, is Chinese families and what they want. Okay, so ed tech companies can't go be profitable anymore. You think the families all just stop sending their kids to after school tutoring? They are absolutely focused on educating their kids to make them competitive, to get into the best schools, pass the test and get into the whatever. I mean, they're absolutely focused on it. They didn't stop that. They just shifted from, we're going to go to these companies. What? They're nonprofit? Okay, we'll just hire private tutors. Yeah. They didn't change at all. If you say, Chinese moms can't have milk powder, they just start bringing it in suitcases. So what Chinese families want, they generally get one way or the other. And the government knows that there's a bit of a balance that goes back and forth. But if the government makes a bunch of rules and they really want this, you can bet on them getting it. If they want to buy a bunch of real estate in California, which they do, they get it. Money goes through Macau and some other stuff. So there's other major forces here besides government. It's a big one.
Yeah. That's a fresh perspective for me. Yeah, thank you. Okay, we doing okay. So we
jumped into the comment.
Yeah, we jump into comment and Q&A.
Some question.
Some question we'll limit to like Alibaba's question because we have not enough time. But a few comments from your students, Jeff. Thank you for inviting you, and a big fan of Ajahn Jeff. And he's still doing your homework. And let's see. This one we already answered from Pitu. Do you think this is competition? I think we answered a bit about this. Can you just provide a short?
Yeah, I mean, Alibaba is so complicated. It has so many moving pieces, but generally speaking, like the smaller e-commerce companies are getting room to grow. I think that's true. But is that impacting Alibaba? I mean, that's e-commerce, right? Okay, let's talk about Alibaba Cloud. Who's the biggest supporter of Alibaba Cloud? The government, because the government wants cloud to be important and to be tech leadership and infrastructure leadership. Who are the biggest player? Alibaba Cloud. Who's their biggest supporter? Government. Who's keeping all the competitors out of the country? Government. So it's like e-commerce. Oh, not so good. Oh, this is really good. You got to kind of
cloud and too bad.
That story looks pretty good from a government perspective.
Okay. For the next question. Oh wait, this one is not so related to. Paul asked if the crackdown is gonna continue for a long time.
Yeah, and I don't even think it's that. I mean, it is obviously big news. It's been going on forever. We had, Tencent got all their new game approvals delayed for like a year, 5 years ago. They all got stopped.
Yeah,
their stock price dropped by half. All the P2P lending companies got shut down, 2,000 of them. I mean, shadow banking has been a problem. I mean, the government has always been active. They've been curbing a lot of social aspects, like what can be shown in video games and movies forever. Can't show a lot of blood. Time travel is not allowed, which I've never really understood what cultural taboo that is. You can't have time travel. So they've always been active. And I got to say, I'm not sure I disagree with that as much as I used to when I was younger. because they are very much guardians in their mind of the culture and the values, and we don't want nudity everywhere, and we don't want pornography everywhere, and we don't want gambling, and we don't want these things. And I go back to the US and it's gambling and pornography everywhere, and I'm like, is this really great? My view on that has changed a lot, where I'm like, so anyways, they are in charge of the social, the society and healthy behavior and things like that. They have always seen that as their role.
Yeah, I would say like the gamings that they limit and like all the like excessive tutoring is I would say they're healthy.
I mean, do you disagree with like kids shouldn't be spending all that time on video games, and parents shouldn't be in a perpetual arms race with their children to tutor them after school starting at age 3? And then, these parents start to spend more, so we've got to spend more, and they're doing more tutors, and the tutor stopping that or trying to, not a bad idea.
It's like keeping up with the Jones with a new twist with education instead.
It's hard for the families that aren't wealthy because they can't match the spending, and then they all take the same Gaokao, the test at the end of high school, which determines which college you go to. So they all study like crazy until 12th grade, and wealthier families use their money, and not unreasonable. No.
But it's just not the big tech, right? It's just everywhere. But big tech seems to be everywhere in the economy. That's why they're.
Yeah, I mean, obviously that's not a China story. Everyone is kind of recognizes these companies are fundamental to society and fundamental to business and culture and politics and news and information. They're cutting across everything. And many of them are becoming unabashed in their use of their power. Silicon Valley banned a US president. That's a gangster move. You got 92 million votes. Don't care. You're gone. And he's gone. That's a gangster move. They are becoming, but they would not do that in China. They have a very different posture in China than they do in Palo Alto.
Yeah. Okay. For the next, this one's just comment. I think Kun Krisana, he said he extremely agreed with you on the culture of Alibaba.
It's impressive.
Impressive, right? Okay. Everyone else said thank you. And what's your take on? This one is not, but we can do this as
Baidu and as AI. I looked at Baidu. I've written a bit about Baidu. I like their cloud business. I like their search business. I wish they'd stop doing cars. I don't know why they're doing it. Everyone wants to be in cars. It's like all the billionaires want to go to space. All the tech CEOs want to build cars. I don't.
Yeah, actually, autonomous car startup is like everywhere, coming up everywhere.
You really want to compete with Elon Musk, who's been doing this for what, 20 years? No. I mean, I like Baidu's cloud business because they're good at AI. Search is AI. They've been doing AI for 20 years, right? So a cloud with real advanced AI, which Baidu has, would be great. And there's also a barrier. They don't have to compete with Google, Amazon, or Microsoft. Their competitors are Alibaba, Tencent, maybe Huawei, Baidu. There's going to be 3 or 4 in China. They could be one of the 3. It's great when the government protects you from the international companies. I mean, that's an awesome opportunity. I wrote a bunch about Baidu.
Gotcha. Maybe if any of you who are viewers who are interested in the Baidu, and then you can visit Jeff website. I think it's really good. Cover many business. I think this question is good, Jeff. If you were in a meeting room with Alibaba's management, what would be your 3 key strategic advices to them?
Yeah, cloud would be number 1, right? All in on cloud, which they are. They obviously are. I think that's awesome. I'd be looking for the next big frontier of e-commerce. Like, where's the next big pile of money? It was, they went from products to services. They went from products to media, digital content, digital product. Then they went from, first, second, third tier cities down to fourth and fifth tier cities. That was a big frontier. Then they started eating into things like groceries. Okay, groceries was overwhelmingly physical. Let's try and shift that into online. I'd want to know where the big ones that we're going to move the needle are for domestic consumption. Because they're doing a lot of projects. I know where the big one is on cloud. I know the retail one pretty good. But I'm kind of looking for the next. Is it still fourth and fifth tier cities? Maybe. There's more money there. I mean, you add up domestic consumption in the fourth and fifth tier cities, it's bigger than the top tier cities. It's just a lot of people with small money. But the overall money is bigger. But it's harder to deliver to them because they're all, the west of China in particular is, huge. It's massive. So the logistics are harder. I'd be looking for the next big jump in domestic consumption, and new retail was the last one in fourth and fifth tier cities. I'm not totally sure what it is. I'm sure they know because they see all the numbers. The international thing, I'd like to see them go after Southeast Asia. They're going in with Russia right now. They're going after Italy, Spain. I think they're in Poland a bit more. I'd like to see them go all in on Southeast Asia. I mean, they bought Lazada all out. That was a big move. I'd like to see them do in Southeast Asia what SoftBank has just done in Latin America. Like SoftBank, how much did they put in Latin America in the last year? Like $5 billion? 10 times what was spent the year before, something like that. I'd like them to deploy like $30 billion into Southeast Asia startups. I mean, just flood it. Do it with SoftBank. I mean, they love doing that stuff. That would be pretty great. Because they can't get into India anymore. They're shut out of there pretty much. LATAM is not as interesting. Maybe Eastern Europe, Southeast Asia.
Gotcha. Okay. Do you have time for a final question?
Yeah, I got time. I got a call in 45 minutes, but otherwise I'm free.
Okay, so Onki Lin asked, so like PCB won't let end use data leverage for money lending by national consumer transaction data. Basically, what is the future of Ant? Will they be able to expand into other financial products?
I don't know what the future is. I mean, I knew what the plan was when they went public. But then they kind of, after they pulled that, they've been dealing with regulators for the last year. I'm not sure what the status is of what they're doing, like sharing. I mean, it looks like the payment data is all going to be centralized, right? So that's fine. I think people overestimate data. I think it's fuel that makes the car go. I don't think it's the car. So if more people have access to it, okay, fine. Maybe more companies start to use it. I would love if Facebook was forced to open their social network to everyone. But you'd still have to build products and services on that would make money. You can't just give away credit just because you see data. You got to have the algorithms and the ops and the fraud departments and all of that. So I'm not really sure I don't really have a great way of thinking about data as an asset. In my mind, I don't quite know what to do with it. I know what a platform business model is for payment. I know what a platform business model is for credit between consumers. Data? Photos, data, everything's data. I mean, so I'm that sort of infrastructure layer I'm struggling with. Yeah, I don't know. I'm watching Ant, but I don't quite know what's going on. And they're not talking very much about what's happening, right? They're pretty quiet last year.
WeChat Pay seem to be quiet as well. I mean, we don't hear from them as much as the Ant side.
Yeah, they just reset their terms, right? They just split WeChat and Weixin. Like, because I have both, the international and the domestic, and I just had to set my international one. So but I don't know if that's significant at all. Yeah, they've been pretty quiet. Ant Financial was all about international expansion. Before they went public, their big story was we're going international. They were cutting deals all over Southeast Asia. They were in 200 countries, 200, 300 million users outside of China. And now they don't talk internet. And then Trump kind of made it all political. And then they stopped talking international at all. Now it's all domestic. And the only international you hear is cross-border payments in Southeast Asia and merchant services. That's pretty much all they mention. So
yeah.
Financial services in China is very political. It's always been political. The banks have always been state-owned. The banks have always been extensions of the government into the economy. If they want to do infrastructure building, this, a guy like Trump or Biden, they have nothing to do with infrastructure. In China, you just order the 4 banks to start lending to the state-owned construction companies and local governments to build tons of railroads or highways. And those debts are never recalled. They're just kind of written off. The loan officers in these banks, and my joke is they wear 2 hats. Some days they act like a private officer where they look at the credit worthiness, and then some days they put on the government hat, and it's just strategic lending that they never collect. So those banks have always been sort of extensions into the economy. So, these companies that are playing in this space like Alipay, they're really in the middle of politics. Financial services, trust, bonds, all of that stuff. It's really hard to understand because the regulations are so complicated. I'm not an expert in that area at all.
All right. Okay. For one last question, a few people asked about Xiaomi. Do you have any, can you share a bit of your
Xiaomi. I like Xiaomi. I love the management of Xiaomi. I think the management of Xiaomi are like rock stars. They're so capable and they're so effective. Lei Jun, guy's awesome. I just wish they would stop picking businesses that aren't very attractive. Like, he ran Kingsoft for a while, they were in every type of business because they were like the Microsoft of China, but then they got wiped out. So they had to jump into gaming and all. So he was super entrepreneurial running Kingsoft. And then he, then he founded Xiaomi, and awesome team. But it's like, you want to make smartphones? Really? Why don't you do Messenger? Why don't you do short video? Why don't you do a good business? Why don't you smartphones? That's not a good business. But he did it, and if it had been any other company, they probably would have died, but they didn't because their management was so. It's almost like I wish they weren't as good because they would have given up on that business. So they keep, and then okay, now what are we going to do next? We're going to do cars. Really? Just do short video or something. They keep driving me crazy. Now if there was one company I thought might surprise everyone in autonomous vehicles, I'd say it's Xiaomi. Because they're super capable as a group. And they've been working together for 20 plus years. This will be his 3rd to 4th major tech company he's built. This guy's a rock star. I just wish they'd pick. Can't you pick one with good economics? I think the problem is he doesn't care about money. I think he's trying to make a dent in the universe, and he wants to make a dent in the universe by doing autonomous vehicles in China. Like Elon Musk doesn't care a bit about shareholders, right? He just wants to go to Mars, right? So that's kind of like, okay. So yeah, I'm going to watch them. But why did they spend a decade building smartphones? Really?
But they have been expanding into like all the consumer goods. Are those like, all the vacuum, TV and those things? Those things are just like fringe, right? It's not a big part of their business.
No, not really. His play, as far as I can tell, was we're going to make phones. We're going to sell them really cheap. We're going to get a lot of adoption, and then we're going to use that to sell software. Because that's so even when they went public in Hong Kong, they said the first line was, we're an internet company. We're not a phone company. We're an internet company. We're going to do software and services. And I'm like, if you wanted to make software, why did you just do that to begin with? why are you going all the way around the block to come back to software? You're going to make a bunch of phones, sell a bunch of phones, and then get those people to make software. And they've pretty much given up on, like, if you read their stuff now, they're like, we're a smartphone company. No, they do make a good percentage of their profits from the software, which has the big margins. And so I'm like, why didn't you just make software from the beginning? That's what WeChat did. You could have done any of those companies. You could have been WeChat. You could have been Pinduoduo. You could have been TikTok. You could have been any of them. You wanted to be smartphones. Okay. I don't know. Maybe it's a guy thing. You know how like billionaires keep building airlines and losing all their money? Like, you know, the quickest way to become a millionaire is the quickest way to make $1 million in airlines is to start out with $1 billion. Like, and it seems to be like a Richard Branson did this, and like it seems to be a guy thing. They just can't resist the machines. I think Lei Jun just likes the phones and he likes the cars. I mean, just code. But yeah, I would buy one though. If Xiaomi made a car, I love their stuff. I go to their store all the time. I don't go to the Apple store because I know there's nothing new ever. I mean, like every decade, Tim Cook makes one new thing. Meanwhile, Xiaomi's like, here's our 30 products for this year. You want smart chopsticks? You want smart scooters that ride themselves? You want, you know, mono wheels? You want hover, you know? I got like air purifiers and air monitor. I love Xiaomi stuff. But the margins are always like, you know. The store's awesome in Bangkok. Go to the one at Mega Bang Na. Like, Xiaomi store's great.
Yeah. My girlfriend also, like, she likes Xiaomi also. She told me to buy the stock. But yeah,
they're good stuff too. I mean, it's quality stuff, right? I mean, they make really good stuff.
Yeah.
But the economics are not awesome for selling smart air purifiers and, you know, smartphones with 5% gross margin. It's like, okay. It's hard to make money on 5%.
But if they're capable, we'll see how they will what they will build in 10 years or something.
He might do the car thing. He might really pull that off and surprise everybody.
Got it. Okay.
Interesting.
Yeah. Yeah. Very interesting. I think we are running a bit over time. So yeah, we should like end the session here. But before that, I just want to say like thank you, Ajahn Jeff, so much. And this time, as P Dam say, the
Damn.
subscriber watching is
Damn. How you doing, man? Dam's the guy who pulled me out of my laptop into Bangkok. I was like happy typing in my little computer in Bangkok, and he reached out and said, "Come meet some people and have some lunch." I was like, "Okay."
That's what
Otherwise, I'd still be like typing away in my little place.
Yeah, exactly. He also did exactly that to me. So yeah,
he's the glue of Bangkok, the social network of Bangkok. You should have your own app. The social network.
Yeah, I gotta thank him so much. But yeah, anyway, would you like to talk a bit about what you do, like what your website and the podcast?
Yeah, I mean, I do. You know, the thing I usually talk about is I just do podcast and subscription network. I'm sorry, newsletter. So, you know, that's emails a couple times a week. And we just take apart these companies from a strategy point of view. So it's always half ideas and concepts and frameworks, how to think about these things. And then 50% is companies, one by one. And you apply the frameworks. And, you know, we've just been doing that for a couple of years now. 101 podcasts are up, 700 articles. I don't know how many companies. Must be 50 companies. Yeah, it's getting kind of, and it's one of these things where like it's like going to the gym, or it's like studying a language. Like if you do it day after day or week after week, it does add up. And so people who sort of stick with me on this, they go from like not understanding what the hell I'm talking about to a year later, they're like talking about this stuff better than I am about the companies they look at, but they use my frameworks. They're not all mine, but some of them are. So, it's sort of a teacher thing, maybe as much as anything. But yeah, that's what we do. You just sign up. You go to my webpage, jefftowson.com, sign up there. There's a free 30-day trial. And people, a lot of people stay for a long, long time. Some people kind of stay and go depending on how mentally tired they are. Because if you're mentally tired, it might be too much. But it's been great. And then, that's kind of the main thing that's on my webpage.
Mm-hmm. At the triangle diagram, the framework. Actually, at the start, I was a bit confused, but after a while, I slowly applied and talking to others in your class, and then it actually helped me think much better in terms of which are tactics, which are like really long term stuff that like advantage.
I can show you the new one. I just finished it, because this is going to be the key to the book. Is this? The chart was way too complicated for anyone. I understood it because I built it, but no one else did. So this is kind of the, where is it? Here it is.
This will be a surprise because we were waiting for the new diagram from you.
So this is going to be basically the main point of the book. Will be, how do I share screen? I can share screen, right? Share screen.
Yeah, you can.
Share screen. Wait, what is this? Window. There we go. So that's kind of what the book is going to be about. Basically, 6 levels of competition in a digital world. Can you see that?
Yeah, I can see it. So one more level than the last time, right?
Yeah, so sort of 6 levels, but basically you're either playing the Warren Buffett game or you're playing the Elon Musk game. Mm-hmm. And you really have to do both. And then we just sort of assess companies on those 6 levels to get a sense of their competitive strength going forward. And then it also lets you tell, like, if a new digital tool is emerging, is it going to change the picture? So newspapers, we would have seen what was going to happen to them very clearly. You're in trouble. Other companies, you're fine. So it sort of can look at the impact of various digital tools as they emerge. And under those levels, I have 6 levels. Then there's checklists under each one. But I'm trying to simplify it down because it was too complicated. And we put some pictures in there, and we'll make it more and more simple. But that'll be the book, and then there'll be 150,000 words. What is that? I don't know. That's about 400 or 500 pages. Then there'll be about 400, 500 pages after, which no one will read but me and like a couple maniacal people. And then we'll do a simple short version. But yeah.
When your book gonna publish? How can
I'm going to try and get the first part out in a month. So it's going to be 6 parts. I'll try and get the first part out in a month or so. But it's all basically done now. So, yeah. It only took me like 10 years of work, so that's fun. That's what you do. You spend all this time, and then you put it, and then you're one of 5 million books on Amazon this year. So
no, but I think I myself love how you can spend some time, generous with your time on like podcasts and everything, and also do your podcast and also blogs. Like this takes a lot of work to write, and then like you do all of this. So I think for all the students, we would like to just thank you so much for
it forces me more than anything else. It keeps me moving. Like if it's actually a lot of work to do an hour lecture online and usually 2 emails per week that are about 2,000 words. It's actually a lot of work. It takes a huge amount of thinking. If I didn't have subscribers, I probably wouldn't do it because it's too hard. It forces me. I'm like, oh God, it's 11. Okay, I gotta go. It forces me to keep moving, which is good for me. But yeah, it's sort of like having an obligation. So yeah.
By the way, I love the blog that you post about the Elon Musk versus Warren Buffett, the way how they're different. Like Elon Musk like focus on the like innovation, and then Buffett focus on like durable competitive advantage. I think I really love that article, and like many of the viewer here like follow Elon Musk and Tesla a lot because I like hold a lot of Tesla, and then I start from that. But yeah, I recommend everyone else to check that out if like maybe on Ajahn Jeff's website. Yeah.
Yep.
But yeah, that's good.
Cool.
Okay. Yeah. All right. Thank you very much for your time then, Ajahn Jeff.
Thank you so much,
Thank
Jeff.
you so much.
Thank you, everybody.
We'll see you
Appreciate
again
it.
in the class.
All
a
right,
good
take it
day.
easy.
See ya.
Bye.
Thank you.